Hey everyone, Dan here. We are in the afternoon hours of Friday, May 21st. We're going to do that Friday thing of take a look at AMC, both the charts as well as the short interest. And as a bonus today, because it's been red hot in my opinion, and I called it out last week or maybe 2 weeks ago at this point, the short squeeze that's happening right now on IPOE ahead of the SoFi merger. We're going to tack that on at the end because there is some interesting things happening with that one that I think you'll want to stick around for. So, AMC, let's first talk about the short interest situation. So, this is one of the bigger pieces of the puzzle, in my opinion. The fee was creeping up a bit around the 12th and the days leading up to the 12th, and then has fallen off a cliff since then. So the fee to borrow these shares right now is pretty low. It's just about 7%, which historically speaking, these were like the sweet areas, over 100%, or in this range over 200%. So those were the times in which real potential for squeezes picks up. So to sort of like reignite some of the squeeze potential or another squeeze potential, I'm going to look for that fee to start creeping up in the coming days and weeks. And it can be quite erratic day to day, so it's good to keep checking in on it periodically. But a fee this low is probably going to be hard pressed to set off, a real big squeeze. Going to look at a few different sources to try to kind of get an idea of the range that the short float falls into. So this one doesn't tell me what the date on this is, but they have 21% of the float being shorted. This is Yahoo. They say that as of April 30th, 42% of the short was being floated, or the float was being shorted. So quite a difference in those numbers. And then here on Market Beat, you'll see they have the percentage of shares shorted at 19.45. That would be overall shares. So we would expect that to be a smaller number anyway. But the interesting thing that Market Beat gives you is the dollar value. So here's the dollar volume sold short, 893 million. So that is just to say that there is a ton of money at stake here with these short sellers, whether they have decreased positions slightly or not with that negative change from the previous month. That still is a ton of money tied up in these short positions. If we come down here, unfortunately, this gets a little bit far away when these reporting dates are nearly a month in the past, but we did see, obviously, there was upward ticking here. So the shorts were increasing their percentages, and then a drop off in March, hypothetically when like an initial squeeze had squoze, and then they picked it right back up, and with these huge jumps up, and then a small, retreat. So, I mean, if you look at just the change, starting in February, of how big the increases were, 27 and 15%, 49 and 27%, versus just 2 times in which the shorts reduced their size from the previous reporting date. The reductions, the minuses, are very, very small relative to how big the increases are. So I would just sort of like couch, this negative with that as like overall, it still is incredibly overextended, in my opinion. And I would guess that like that 40% of the float being shorted is probably on the more accurate side of things. One way that we can sort of just cut through on all of this sort of questionable data that seems to say one thing on one site and another thing on another site is to just look at the daily ratio. So you look at the ratio as picking up steam, right? And I have no doubt that this is in response to them being able to push the price down a bit recently, but also of that fee dropping pretty significantly. So that fee getting into the single digits again is, I'm sure, a big piece of the puzzle to why this ratio is increasing. in recent days. So shorts are coming back in big time. The interesting thing is this huge drop off in total volume, has caused the short volume to also decrease, but as a ratio, it still is ticking upward. So interesting to see if the volume does get up into these crazy numbers again, like 2 to 3 times the volume that we've seen in the last couple of days. If that ratio continues to stay high, that will sort of be a clue that they're coming in hot. But the fee needs to jump back up again, in my opinion. All right, let's hop over to the chart here. So here's a 3-month, 2-hour chart to give us sort of like a macro view. Obviously, there's this nice floor getting set up here. I would say, there's obviously a lot of points here, and it's fallen under that a little bit right now. It might sort of quickly retrace it, but there's these wicks. There's kind of like a tight zone here of a bunch of little areas. So there's sort of like these tight areas as we get into the high 11s. To the upside, so I would expect it to get caught in those zones. To my eye, and in my opinion, this 1292 is a much stronger zone, as is right about here, 1259. So these are immediate areas that I would. Okay, my recorder shut off, which has never happened before, but we're going to roll with it. But anyway, I was saying this area right here where the price is battling currently, I would be looking for it to establish support there. So these lower zones, I would look for it to bounce and then establish these upper price zones as support in order to sort of work itself back into a green situation. And obviously, the charting piece of the puzzle that's going to put a lot of pressure on the shorts is the fact that you have several green days, that is going to cause them to be losing so much money from the price not going down, so them having to close out by buying more expensive shares. But also, that's why we need the fee high. We need them losing money both on the end of fees being high, so it's expensive to hold on to those positions, but also on the side of the stock price itself moving up, so that they don't really have an escape route, and they end up having to just close out as quickly as possible to stop losing money. Okay, so that's the macro chart there. Let's jump in. Well, we could take a look quickly at the at the indicators. So RSI quite low, so that could bring some buying pressure back into the markets. And then MACD, so longer term here, bearish momentum was quite high, has died off quite a bit, so everything's sort of flattening out here. The MACD is in negative territory, so it gives it a lot of run room if it does want to come up and make another attempt. You see it basically double topped out here and then had a big drop off, but it did have a nice run up, and could certainly swing back with sort of a fever to the upside again. All right, let's jump over quickly and just see if there's anything interesting on the shorter term chart, in case folks are taking short term swing trades or day trades or something like that. So from a 5-day perspective, this huge drop off here, and it's sort of consolidating in this consolidation channel, which is slightly downward, but nothing really insane. It's probably a little bit more like this. Yep. And so, it's toward the bottom of that consolidation channel at the moment, so it does have a little room to still catch support. That'll be down around that $12 area, high 11s. We had charted, I think, 11.89 on the macro chart. So, I'd look for it to work itself out of this consolidation channel and then work on making a move up. For near term, sort of support resistance zones, that 1360 is going to be super important. All the support here, turn to resistance there. So getting it to start interacting with 1360 again would be helpful. If it can get support there and get sort of a jump zone, I look for it to make its way up to about here, 1430. And then, your next stop is probably going to be something around 1475. So those would be my nearer term price targets. if AMC can get up there. And obviously, if it gets up to that 1360 zone, in my opinion, there's going to be enough sort of bullish force there that it should give it a bunch of opportunity to go ahead and potentially kick off a squeeze. That's where it would, like, to my mind, like, give it a lot of potential for that squeeze to kick off. All right, that'll do it for. Oh, well, I guess we could look at. Sorry, I'm all disheveled because of this recording thing. Now I'm thinking about how I'm gonna have to splice it together and stuff. But but low on the RSI end for the short term as well. So that again might give some nice hold / buying pressure, so that it doesn't get into oversold territory. Negative territory on the MACD. Losing bullish and bearish momentum on both ends. So being that it's already in this negative territory, hopefully it's sort of like triple, quadruple bottoming out there, and we'll give it a good opportunity for an upswing. Okay, so that's going to do it for AMC, and now I'm going to switch over for an IPOE update, and we'll sort of like do a similar thing there. First, we'll take a look at the stats, because this puppy has been a beast lately. So we've mostly focusing on this big run up here. This is what I'm considering as the squeeze being underway. So here's what's interesting to me with your brief IPOE update here. So huge uptick in the fee here. Fee is now at 141%. There's only 20,000 shares available. So you see it's actually ticking up higher in the afternoon. I mean, you look at these timestamps, these are 15-minute timestamps. So this data gets updated really frequently. So it was in the 140s, now in the 170s. So it's very expensive for folks to be borrowing these shares and then holding them, especially as IPOE has been having green day after green day after green day. In terms of where we are with this side of things, the ratio that we have on this one, short float 42%. Let's see what Yahoo says. Oh, gotta remember where I'm going here. Oh, yeah, that's right. Share shorts and short ratio, short percent. Okay, they have 42 as well. Okay, so we have some more consistency on this one than we did with AMC. All right, and on this side of things, we have to go to the short interest first, and then 444 million short. So you see the difference there from what we talked about with AMC, but they have about 32%. They have increasing positions. The one I'm sort of most interested in, to be honest, is on the daily breakdown. So let's plug this in, scroll ourselves down here, and see what they've been doing. So the ratio is holding / increasing. So 25-28 is the highest that we've seen since the 7th, and has sort of like stabilized in this low 20s to mid 20s range. So shockingly, that fee is exploding, and the short sellers don't seem to be retreating. So I think that there's a lot of squeeze left in this one, especially if the pressure can keep being put on by the price not falling. So there's a bunch of really simple zones that we can snatch out of here. So that, like, most immediate support that I'd be looking for would be just above 18. And then to the upside, we will have some stickiness right around where the price is now because of all, like, this previous topping outs and then that previous support there. Once we work ourselves through that, squeeze ourselves through that, I think our next stop is into the 19s. And then we're probably getting ourselves through 19 by hitting a bunch of these zones here. And then the next big test will obviously be what happens when it hits this commonly topped out area just before 20. But other than that, I mean, like I said, it looks to me like there's a lot of squeeze left. And so I'd be looking for these prices in the 20s. Since I first took my position when I first called this out, I've not changed. In fact, I was wishing that I had the capability to get in more, but I just don't at the moment. So I'm letting what I have ride. but these green days have obviously been super helpful. If it's worth it to take a quick look at the shorter term 5-day, we're just in this nice channel up here and still sort of holding mid-channel. So, test the top, test the bottom, test the top, test the top, and now we're mid-channel. So, it does leave some wiggle room to break down toward that $18 support zone that we were talking about. But, you would additionally have channel support there. So I'd be looking for that to do all right. On the RSI side, we're still about mid-range, so nothing preventing more buying pressure coming in there. We have a little bit of a turn to the bullish side on the MACD, so we'll see what this push can bring. It would be nice to get ourselves over this previous histogram area and just sort of like confirm that the bullish pressure is increasing, because again, pressure is what will help the squeeze get squoze. Okay, well, good luck. I hope everyone had a good week, but good luck if you're in AMC or IPOE, and I appreciate you all watching. I will see you in the next video.